It's 10 a.m. on a Tuesday. You are sitting in a leather chair that is slightly too comfortable. The air conditioning is humming. The pen in your hand feels heavy. Across the desk, a loan officer smiles. He pushes a stack of papers toward you. This is the moment, the mortgage, the business loan, the student debt. You are asking for $500,000. You think the bank is checking their vault to see if they have it. You think they are lending you the savings of the old lady standing in line behind you. You sign, the ink dries. The officer types 6 digits into a computer. Click, enter, the money appears in your account. Just like that. But here is the terrifying reality. 5 minutes ago, that money did not exist. It wasn't in the vault, it wasn't in the old lady's account, it wasn't anywhere. By signing your name, you didn't borrow wealth. You summoned it from the void. And in exchange for this magic trick, you just pledged the next 30 years of your life. Welcome to the alchemy of the modern age. Most people live their entire lives without understanding the difference between money and currency. We are taught that banks are warehouses. You put gold in, you take gold out. They charge a fee for safety. That is a comforting fairy tale. But it hasn't been true for over 300 years. Today, a bank is not a warehouse. It is a manufacturing plant, and the product they manufacture is debt. This is called fractional reserve banking, or more accurately in the modern era, credit creation. When you deposit $100, the bank does not keep it safe for you. They keep perhaps $10, sometimes $0 depending on the regulations of the year, and they lend out the rest. But they don't just move the money, they duplicate it. You still see $100 on your screen, but the person who borrowed it also sees $90 on theirs. There is now $190 in the system, backed by only $100 of real value. Now scale this up, not $100, but trillions. Every time a loan is issued, new currency is typed into existence. But here is the catch, the glitch in the matrix that keeps you awake at night. The bank creates the principal, the loan amount, from thin air, but they do not create the interest required to pay it back. This means there is always more debt in the world than there is money to pay for it. It is a game of musical chairs designed by a mathematician who hates you. Someone must lose. Someone must be liquidated. The math guarantees it. How did we agree to this? We didn't vote for it. To understand the trap, you have to go back to 17th century London. The Civil War is raging. Merchants are terrified of having their gold stolen. So they go to the goldsmiths, men with thick walls and iron vaults. The merchant deposits his gold. The goldsmith gives him a paper receipt. I owe you 1 gold coin. People realized these paper receipts were easier to carry than heavy metal. They started trading the receipts, buying bread, paying rent. The paper became money. The goldsmiths watched this. They sat in their vaults, surrounded by gold that nobody ever came to collect. And then, the dark realization hit them. A thought that would change history. If nobody checks the vault, I can write receipts for gold I don't have. They started lending out paper receipts to people who never deposited gold. They collected interest on gold that did not exist. They became the richest men in London. It worked perfectly. Until the day everyone came back at once. The run on the bank. The moment the illusion shatters. When the people realized the vault was empty, the goldsmiths didn't go to prison, they went to the king. They said, "Sire, if we fall, the economy falls. Legalize our fraud, make it the law." And in 1694, with the Bank of England, the system was formalized. This is the DNA of the card in your wallet right now. It is a receipt for value that isn't there, issued by an institution that bets you won't check. The ancient philosopher Al-Ghazali warned us. He said money is a mirror. It reflects value. It has no color of its own. But when you print mirrors, you distort reality. You create a hall of mirrors where no one can find the exit. So what? You ask. The system works. I can buy coffee. I can buy a car. Can you? Or is the car getting further away? When a bank creates money from nothing, they don't create more cars, or more houses, or more eggs. More money chasing the same amount of goods. We call it inflation. But inflation is not a natural phenomenon like the weather. It is a policy. It is a transfer of wealth from the people who hold cash to the people who print it. Think about the Cantillon Effect. This is the economic law that explains why the rich get richer. When new money enters the system, it goes to the banks and the government first. They get to spend it before prices rise. They buy the stocks, the real estate, the assets. By the time that money trickles down to your paycheck, the prices have already adjusted up. You are running on a treadmill that someone else controls the speed of. Your savings are melting. Not because you are spending them, but because they are diluting them. If you worked 10 years to save $100,000 and they print 20% more currency, they just erased 2 years of your labor. They didn't break into your house, they didn't take your wallet, they just clicked a button. And 2 years of your life vanished into the ether. This is why you feel tired. This is why a single income can no longer support a family. You are competing against a printer that has no off switch. And you are losing. It is a mathematical inevitability. The debt must grow or the system stops. And when the debt grows, your value shrinks. Now you see the machine. It is daunting. It feels hopeless. But history shows us that every illusion eventually breaks. The goldsmiths failed. The Weimar Republic failed. Rome failed. The system relies on one thing: your participation, your faith. So, what do you do when the currency is a lie? You stop storing your life energy in their paper. You look for things that cannot be printed. This is the concept of hard assets: gold, silver, land, commodities, mathematical protocols. These are things that require effort to produce. They have a proof of work. You must understand counterparty risk. If your wealth relies on someone else's promise to pay, you do not own it. You are just renting it. The goal is not to get rich in dollars. The goal is to preserve your purchasing power, to make yourself independent of the printer. They can print currency, they cannot print trust, and they cannot print time. Your time is the only finite asset you have. Do not trade it for something they can create for free. The cycle is accelerating. You can see it in the grocery store. You can feel it in the streets. We are nearing the end of a long-term debt cycle. The reset is coming. I want you to answer this in the comments. Do you think the system can be fixed, or does it need to be replaced entirely? I read every perspective. Let's start the debate. If this gave you clarity, hit subscribe. The pattern is repeating, and I'll help you listen.